Hey, this is Arthur Hill, Chief Technical Strategist here at TrendInvestorPro.com. You are tuned in to Next Level Charting. Thanks very much for joining us. So today we're going to dive into SPY and show you the bottle rocket candlestick that formed on Tuesday. SPY is not backing down. The wedges in MDY and IWM continue to rise. And despite strength in stocks, gold and bonds are still holding up. So I'm going to start with a weekly chart for the S&P 500, SPDR, SPY, just for a little bit of perspective here, because I think what we have is we have a market that is on something. Maybe it's monetary drugs, maybe it's fiscal drugs, maybe it's all the news that is surrounding COVID and what have you. But if you look at this, you can see two different periods here on this chart. First we have a nice uptrend. This is pretty normal. And we get some volatility and we hit a new high. But then something happens and we get really hit hard there at the end of 2018. But we have a new push to new highs, and then we get hit really hard there in March. And so you can see the market has been really chaotic since January 2018. That's over 2 years. Now, this is just the S&P 500, and it is back above that January 2018 high, which is right there around 290. So it's still doing okay. But when we go further down in market cap, we'll see that that's not quite the case. The average stock is still struggling for the last 2 years or more. So on this chart longer term, we're in a big upswing. We got an outside reversal the previous week, and we're bouncing back this week. You can see the PPO 535.5 is still above its signal line. But if that turns down and moves below its signal line and into negative territory, that's going to be a bearish downturn. And that could mean at least a correction of this big advance. Now, if I scroll down to look down in market cap, so we'll go from the S&P 500 weighted by market cap to the equal weight S&P 500. So there's that January high, and you can see we're right at it. So basically, the average stock in the S&P 500 is unchanged over the last 2.5 years. It's gone nowhere. And you can also see that depending on what happens here, because we've got a 52-week low. All three of these hit 52-week lows: RSP, MDY, IWM. And we've got very strong bounces. And this is what I would call an intermediate uptrend since March. And the trend is still up. And so I think that's the trend we've got to respect. Until it reverses, the path of least resistance is up. Now, if it does reverse, then we've got a lower high coming in here for RSP, for MDY, and IWM, and that would be negative. And we're going to look at these three in a little more detail coming up. So let's take a look at SPY, which has turned a bit volatile over the last couple of weeks. We can see the initial surge there, a flag-like consolidation, and a breakout and an extension higher. And then we had this gap up, a little bit of a stall, and a gap down. So technically that's an island reversal, but we're still in an intermediate uptrend because you can see this. There's a big support zone there in that 300 area. And the reason I mark that support zone there, you can see the 200-day moving average is there. You can also see that a 50% retracement would extend to around 300. So you've got this big move up, and you're due for a pullback. And the breakout from the flag, the low end of that zone, 295-ish, would also mark support. So you kind of got three things coming together there. You've got the breakout zone that turns into support. You got the 50 to 61.8% retracement, and you got the 200-day. And so with this pullback, you became short-term oversold. It's about 8% from high to low. And then we get this reversal day on Monday and a gap up on Tuesday. And we're kind of stalling on Wednesday as I speak. But I'm calling this a bottle rocket candlestick, and I'll show you the tweet here and the reason that I'm calling it a bottle rocket candlestick, because you can see it looks like a bottle rocket. Yeah, technically the shape is a hanging man, but if you look at where it's forming after a breakout of sorts. So you've got a move above this high here, and I would call that the first support level to watch for a failure. So, this is a breakout and a liftoff, and you can see that long tail kind of looks like the long tail of the bottle rocket. And then there's the body of the bottle rocket and the body of the candlestick. So we've got this gap breakout, and I'm calling this high, this close from Monday as the key level to watch. And if we break below that level, then we have a failed breakout and we have some concern because we could get back below the 200-day, which is the red line. Now, we don't have a bearish wedge in SPY, but we do have some potential bearish wedges in the equal weight S&P 500 here, MDY, and IWM. And what exactly is a bearish wedge? Well, I quantify or qualify my wedges, if you will. If you're hitting a new high, I wouldn't draw a wedge. If you're in a long-term uptrend, you're hitting a new high. But if you're below a prior high, and yeah, this advance did exceed its 61.8% retracement and all that. So it's an above average advance, but it's still below this high. And there you can see the upper trend line and then the lower trend line, and they're kind of converging. But it looks like a counter trend bounce because you're having this battle around the 200-day. There you can see there's the big move up and that little breakout on Tuesday. But we've reaffirmed support here from this gap in late May with this low here on Monday and this trend line. And so if we fail and RSP breaks down below this support zone, that's going to signal a continuation of the February decline. Now, I don't know if we're going to get a crash or not. I just would suggest that that is a bearish signal that has reversed the intermediate uptrend, and that would be a reason to take some money off the table and raise some cash. So if you look at MDY, we can see a similar pattern unfolding. And these two are, they're battling the 200-day just like the S&P 500. There's a big battle for that 200-day because MDY got above it and then back below it. And so this is more of a pronounced wedge, more robust, if you will. And if we break down there, then that is going to be a bearish development. And then I'll move on to IWM. I'll show you IJR. It doesn't have a wedge just because the lines don't line up. But, if you look at the essence of what's going on here, you have a decline to a 52-week low, and you have a bounce that's retraced around 2/3, 61.8 to 66.67% of the prior decline. So that's kind of like 2 steps down and 2/3, or let's say 1 step down and 2/3 of a step back up. And if this reverses here and breaks down, then that is going to be bearish. But I think we need to look at IWM because it has a more robust wedge here. And there you can see IWM. It's got the wedge working. So as I said, as long as the wedge rises, I give the benefit of the doubt to the bulls because we got the flag breakout. We're back below the 200-day, but, we got this bounce, this big reversal on Monday and this surge on Tuesday. So if we give that up and we break support there, that's going to be a wedge breaker, and that's going to be a failure at the 200-day. And that would be the sign that things are not well. So again, first thing to watch is the close on Monday. And I would just watch that in SPY because these small cap things, they just get really, they're just more volatile. So if SPY closes below Monday's close, that's the first warning. And then if you start getting breaks below Monday's low, that's a bearish signal. So what's going on at trendinvestorpro.com? Well, I'm glad you asked. I just put out part 4 of a strategy that uses the Stoke close indicator that I've developed for momentum and trend following. And I back tested this with an all-weather ETF list. It has 50 ETFs, 10 alternative ETFs that are not related to the stock market, and then 40 stock-related ETF. It's a very curated list that is designed to offer something no matter what the market environment. I also updated my preferred moving average combo for the S&P 500. I think you can guess it. Of course, it's the 200-day. And I also put out an article where I updated the breadth model because we had a change in position on the breadth model. And what I've done is I've quantified the breadth model. And sorry for this fast scroll down, but we'll get down to it. So I've got a long-term breadth model that I've quantified in Amy Broker with signals, and I combine it with that moving average crossover. And you can see it did flip to bullish for a week or a few days there, but it is now back to bearish. And so that tells me that the odds of breaking that low from Monday and reversing this intermediate uptrend are above average. So stocks are not backing down. They're still in these intermediate uptrends, and I've given you the key levels to watch. But what's also interesting is bonds and gold are really not backing down. In fact, I think they have bullish continuation patterns working. So if you look at TLT here, we can see, first of all, it's in an uptrend. All right, this is the PPO 20-200-0, and it is positive. It means 20-day EMA is above the 200-day EMA. That's a 52-week high. And you can see after that high, you had this big dip and a move back to the high. And I'm using a close-only chart to filter out the noise. And then you had another dip, but held above this low. And now we may be turning up. And if we get back to 170, well, that's going to be a bullish cup with handle pattern. And we can see that momentum is already improving because the PPO has turned up and moved above its signal line. And gold also has a bullish continuation pattern working. If you look at long-term gold, it's clearly in a long-term uptrend. This is GLD. And you had a 3-year consolidation going nowhere. Most of 16, all of 17, all of 18, and then started up in 19 and got that massive breakout in the summer of 2019. So that was the bullish signal. We had a little consolidation and a breakout. And now we've had this surge to a new high and then a consolidation. And if you put this on a daily chart, it would be too long to be a flag. But this is a weekly chart, and you can clearly see it's a big surge, it's a consolidation, and that makes it a rest after the big surge, a rest in the uptrend. And if we get a breakout there at 165, that's going to argue for a continuation higher. All right, so that concludes this edition of Next Level Charting. If you'd like to know more about trendinvestorpro.com, come take a visit. There are some free articles and also some premium articles. Thanks very much for tuning in and have a great day.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.